It was nothing short of striking that the national child poverty rate hit a record low of 5.2% in 2021. And that included a decline in the rate of Hispanic children from 14.7% in 2020 to 8.4% in 2021. That's something I think we're all proud of, both sides of the aisle. Recent census data shows, however, that many of these families slid back into poverty upon the expiration of the expanded child tax credit. Now, I can't help but notice that a lot of the Republican proposals for spending suggest delaying or reducing benefits that have been earned and are meant to be retirement security for older Americans. The poverty rate amongst U.S. seniors 65 and older is already nearly double that of the OECD average, and just 3 countries have worse income inequality among this age group. Question for Dr. Moon. What are the expected impacts of these proposals to cut Medicare on senior poverty rates and inequality?
Thank you. I think that the important thing to keep in mind here is that older and disabled Americans are like all the rest of the population, and that is there are some who have very modest incomes and some who have much more substantial incomes. But the number of seniors who rely upon Medicare and Social Security to a massive degree is much higher than many people appreciate. And for those with moderate incomes and not very far above the poverty level, because our low income protections for seniors are not that generous, this is a real potential burden. They're already paying a substantial amount, often more than a quarter of their incomes for their health care costs, for example, and further cuts in the Medicare program or further requirements for them to pay more would have a substantial impact. It doesn't always show up in terms of the formal poverty rates because we base that on income and not on Medicare, but people who look at the in-kind contributions that are made in alternative measures will often note with alarm what would happen if you were to, for example, reduce spending on Medicare.
Thank you. Now, unsurprisingly, a lot of our Republican colleagues are focusing on cuts across the board in the budget, and Medicare is no different, focusing on cuts to benefits, cuts to coverage, and cuts to access. When I believe what we should be discussing is ways to preserve and build on Medicare's many successes. Now, efforts to strengthen Medicare and save on costs don't have to be mutually exclusive.
Hello, friends. You may be owed an inflation relief payment. New relief programs have been expanded to help more U.S. households. Lawmakers have agreed for more money to be put towards these relief payments, and eligible residents of these states will be able to receive up to $1,000. My dear friends, please make sure that you watch until the end of this video to find out if you qualify. Also, every Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, all you have to do is click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. Thousands of older and disabled Pennsylvanians will qualify for help from a landmark state property tax rebate program after Governor Josh Shapiro signed a major expansion into law. The program, which provides a partial refund on rent or property taxes paid the previous year, offers a financial cushion to some of Pennsylvania's most vulnerable residents. But the number of individuals receiving the benefits has fallen every year since 2009, after state lawmakers failed to update the income limits in order to qualify. The new law reverses that decline and seeks to prevent it going forward. An estimated 173,000 households will be newly eligible, while roughly 400,000 current recipients will receive a boost in the dollar value of the rebates. The income limits will also be adjusted for inflation every year to ensure that small, routine increases to Social Security benefits do not knock people out of the program. It is a major factor in the shrinking number of residents who are receiving help. For Governor Josh Shapiro, expanding the property tax and rent rebate program fulfills a key campaign promise. The changes represents the largest targeted tax cut for seniors in nearly 2 decades. Despite some reservations from Republican lawmakers about the potential for automatic spending increases, the bill passed the State House with widespread bipartisan support and was also approved by the State Senate. As a contentious budget impasse over school vouchers draw to a close, Governor Shapiro said, "The expansion is an example of what it looks like when Republicans and Democrats come together to actually get stuff done." Previously, the income cap to qualify was $15,000 for renters and $35,000 for homeowners. The new measure eliminates this disparity by raising the limit to $45,000 for both. The lowest income households will be eligible for rebates of $1,000. That is up from $650, the previous maximum. But if you reside in Georgia and have yet to submit your state income tax returns for either 2021 or 2022, it is crucial to take action soon. Georgia taxpayers who received an extension from the IRS now have until October 16, 2023, to complete their tax filings and potentially qualify for a one-time tax credit. To be eligible for this tax credit, you must have had a tax liability in 2021. Georgia residency is not a strict requirement. However, you have had to pay taxes in the state. The amount of your potential refund is contingent on your income and the taxes that you've paid. For single filers, the maximum refund is $250, while those filing as heads of households can receive up to $375. And then married couples who file joint returns may qualify for a maximum refund of $500. All eyes will be on the September jobs report when it's released on Friday morning, as investors look for clues about the labor market's health in the face of higher interest rates and sticky inflation. The Labor Department's high-stakes September payroll report is projected to show that hiring increased by 170,000 last month and that the unemployment rate ticked down to 3.7%. That would mark a drop from the 187,000 gain in August. The Federal Reserve is closely watching the report for evidence that the labor market is finally softening after months of surprisingly solid job gains as policymakers try to wrestle inflation under control. Although the Consumer Price Index has cooled from a peak of 9.1% in June 2022, it still remains well above the Fed's preferred 2% target rate, despite 11 interest rate hikes in the span of 16 months. The labor market has remained historically tight over the past year, defying economists' expectations for a slowdown. Although economists say it is beginning to normalize after last year's blistering pace, it is nowhere near breaking. The data, combined with historically low jobless claims, points to a labor market that remains resilient despite growing headwinds, including a report that indicated private sector job growth fell to the slowest pace since early 2021. So, dear friends, how's the economy in your town or city? Please let me know in the comment section below. That is the end of my daily stimulus update video for today. Thank you so much, friends, for being part of this community. Tomorrow, I will be announcing several winners for the Walmart gift card giveaway, so please make sure that you do stay tuned. Thank you, my friends, and have a wonderful and very blessed week.